Hi everyone, welcome to the pre-watch video on a relatively important session, which is on creating the financial reports by summarizing the business transactions. Now this looks very complicated. I understand that you might think that there will be a lot of information processing and rules of accounting that will follow, but the reality is far from it. So in this live class that we are training for, we are going to learn the art of observing the business transactions the way a normal business runs, and how we can, by applying simple common sense, convert it into a meaningful financial report. Okay. Let me just share my screen and give you a quick heads up on where have we come thus far. This is a slide that you would have seen in one of my live sessions before. Um, from here is a corporate finance manager where you are taking a decision to maximize the shareholders' wealth, earn more profit, etc. And from step number two is where the accounting starts. And you know that accounting is an input recording of things, while presenting is very different. That's the output. That's the outgoing of information in proper formats, etc. So this is the focal point right now. I know I've skipped step two, but we'll come to that. From a manager, I'm again and again mindful of the fact that I'm training a manager, and I'm not training someone to make the accounts, but to make you a good reader of the account that way. So what we are going to do here together in the live class is that using a formal case in decent length case, in fact, the best news is that you are going to create a financial report, which is a balance sheet and a P&L yourself, without much of my help. All you need to understand is some obviously common sense, which is a great asset in any case, and some of the basics that we are going to look at in this particular video. Also be mindful of the fact that you know the nomenclature is going to start hitting you from this session onwards. So up till here we've been treating all our non-commerce students really like a mollycoddled protective lot, but sooner than later the reality has to come down, and therefore I would imagine that all of you now are capable to withstand some of the terminology that's going to come up. Okay. Also, just make sure that you don't bring in the angle of cash flow statement right now. You're aware that the three broad medical reports about a company: the balance sheet talks about the position, income statement talks about the performance, and cash flow talks about the liquidity, what you did in the previous session. Here in the live session that's going to follow this, we will not bring in cash flow. We will treat it special, separate, a little more advanced kind of a topic. So I want you to channelize all your energy into a balance sheet, a statement of the resources and obligations, and income statement, the statement of performance. How well is the business being run on a day-to-day basis? So all you need to know is to be prepared for that case is a very simple broad understanding of these five things which are there on your slide right now: asset, liability, and equity. I would like to put it on a different pedestal compared to incomes and expenses. Let's explain. So, and most of you, even if you are non-commerce background, you would have heard about these things in a different context. So let me just kind of bring things down for your reference. And I'm also mindful of using some of the household common examples which are far from business nomenclatures, etc., just to make things more appreciative from your context. So a very good example of an asset, the word called as an asset, is a best friend. Now, what's best friend to you? Best friend is someone who has some kind of value for me. We use the term value very loosely. So by value, I mean some kind of a benefit, some kind of an inflow, something positive, that it's there for me. So I'm going to use the word resource as a synonym for asset. An important point here: anything or anyone from whom I have taken the benefit in past already, but have nothing left for me in future, I don't treat that individual or that element as an asset for me. That's quite greedy, quite selfish of an accountant, but that's what life is. So imagine, a very rude example would be, but nonetheless I'm going to take that. Our parents who are dependent on us now. Okay, so they are very old, they have no stream of income. Should there be a parent like that, the children don't, as an accountant, and purely as an accountant, there is a lot of emotional angle to it, but as an accountant, those parents will actually be classified here. What is a liability? It's an obligation. It's a negative word. It's something for which you have to pay up something in future. Okay, and an important point is, don't miss out the futuristic angle. Anything for which you don't have to pay, in future is no more an obligation for you. A parent who is earning and is supporting you in your education is an asset for you. But a parent who is dependent on you is a liability. Do you see the difference? The same entity changes the position. Okay, very rude example, but helps you understand things better. So more examples of resources. My mobile phone is a classic example of resource. My laptop using which I'm delivering this. My digital pen by which I'm scribbling this down. These are all resources to me. The house that I live in, the car that I drive. These are all resources. Not because I have them, not because I have paid for them, but because there is some futuristic angle, some futuristic value that I see in them. Is it possible that I stop seeing a futuristic value? Absolutely, yes. Okay. So imagine, the phone suddenly drops and breaks down. It will no more be an asset for me. So you see that the situation is very dynamic. So I'm going to use 4 keywords here. Future, we have explained, has to be futuristic, probable, even if not 100% sure. I'm probable of getting that benefit. It has to be a monetary term. Typically, like I use the example of best friend in a household context, it's not a good example from a business accounting sense, because in accounting you would imagine that we need things to be monetarily valued. So ego clashes, friendship, emotions, they all can't be recorded in accounting. It has to be monetary in value, and benefit is something that reflect the inflow of value. Okay, 3 words are common. It's just that in context of liability, the inflow becomes an outflow. Don't forget, it remains a futuristic. Example, I had a loan of for a huge amount for last 20 years and I've repaid it. The moment I repay, it's no more an obligation, no more a liability, because there's nothing futuristic. Similarly, there is just a lot of government, policies by which if you put up a plant in a particular area notified by the government, you get some grants. So the rule is that you take 100 rupees from a bank, the 20 rupees, I'm taking random numbers, 20 rupees is a subsidy by the government and you have to repay only 80. So tell me, how much is the liability the moment you take that loan? 100 is the amount that you had actually taken, but that's not the amount that you have to repay. The amount that you have to repay is only 80. So for you, the liability is only 80. So do you see that it doesn't matter what you did today. It matters what will happen tomorrow. So, and at this point, I wanted to highlight that accounting is not only a historical looking thing, it's very, very futuristic oriented. Okay. Coming to a very interesting aspect of equity, that's where all the return game, the valuation game, the profitability, etc., comes into picture. So owners, what's in it for the owners in the business? So typically we believe that owner controls the business, owner owns the business, but only after paying up the outsiders. So in the priority sequence, they are second. So the different names of this owner's equity, we call sometimes them as capital, sometimes as net asset, typically A minus L. Sometimes we call them also as net worth. In any case, it's assets minus liabilities. Someone has to give me 100 rupees, and from that, I have to pay 60 rupees to someone. So, what's the futuristic claim that I have as an owner? It's only 40. Okay, so whenever you look at the balance sheet of any business, the medical report, which talks about the resources on one hand and obligations on the other, just look at it that these are the future inflows that are expected, these are the future outflows that the business have to pay, and the remainder is what the equity can hope, can expect to derive out of business. Okay, All this gets created by historical actions. Don't forget that. But the impact is very, very futuristic. Okay, that's my explanation of asset, liability, and equity. Comes the last leg, which is the income versus an expense. Income is, you would understand it much better. Many of you would have, some salary income, some business family income in terms of this, some revenue, some business service, etc. here or there. It's basically the principal revenue stream of a business. So let me take some examples. It's better to explain it through that. For Renbaxi, the income is the manufacturing and selling of medicines. For Maruti Suzuki, it is manufacturing and selling of cars. For Ernst & Young, it is the consulting services or audit services or taxation services. It's the principal way by which a company is established to earn money. So if someone knocks at the door of the company, knock, knock, why did you, take birth? Why were you created? So the answer to that question will be the income. So if someone asks Maruti, why were you created? Answer is, I was created to manufacture and sell cars and make money. So that's your income. And here, finer point, income of a property dealer is not by making a sale of the house. It's only by facilitating that sale. So a house worth 50 lakh gets sold, on which a property dealer made 2 lakh. Only 2 lakh is the income of the property dealer. But for the owner, 50 lakh is the income. So you have to just look at what's the role that my business is playing in the overall chain. Classic aggregation model is where the confusion comes up. Uber, Ola, Oyo hotels, or let's say Flipkart. So a shoe gets sold on Flipkart worth 2,000, out of which 200 is the commission that the Flipkart makes. So Flipkart has made an income only worth rupees 200. Don't think that Flipkart has made 2,200 or 2,000. And this is the finer point where we are going to look at once we do the advanced topic of gross versus net income. Okay, and we are going to leave it right now. That's not the main gist of the topic, right? What's an expense? In simple terms, we all understand this the best. Cost. Cost means any any resource spent to get something in return. So let's take Maruti's example. So to be able to manufacture the cars, they need to buy some raw material. That becomes their manufacturing cost. They need to do some marketing and branding, becomes their selling cost. They need to do some kind of a shipment of a car from production in Manesar, let's say, to down south in Chennai where the consumer is. That's called as distribution or logistics cost. Their long-term assets are getting older upon usage. That's called as depreciation. Sometimes people don't understand depreciation at this stage, which is absolutely okay. Just think about it. Your mobile phone getting older, that fall in the value of your mobile phone, that's the depreciation. So different type of expenses have to be incurred to be able to earn that income. And therefore, expenses less, so income less expenses is what is going to give you something called as profit. We all understand profit. Okay, so I think that's good enough in terms of this pre-watch session. Just make sure that you keep your common sense intact and absolutely be prepared to take the plunge into creating the balance sheet and P&L yourself. You can easily do that if you can divide and observe things as your assets, liability, and equity, and income and expenses. If you can make this division, I'm sure you can very well process all the information and make wonderful, meaningful financial reports. Okay, I can't wait to meet you in the live class. Thank you very much. Looking forward.